G'day, mate. Tuesday, March 5th, 2019. This is your daily Forex trading strategy session. Brought to you by Forex.Today. Let's go! All right, so good morning. Hi, my name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client. We appreciate you. And I am your loyal, humble currency trader, analyst, servant, guide. Just call me Obi-Wan. I'm here to help, man. I want to help. Let me help. We're going to conduct technical and fundamental analysis with the overriding goal to put together trade plans. It's up to you to learn from these. I'm not here to put you into a trade, but I will teach you how to be a trader. Patience and discipline on top of technicals and fundamentals. It's a good time to be alive, a good time to be a currency trader. I want to bring you success. It's my gift, but you still have to work. Blood, sweat, and tears for years. But when you do feel comfortable trading, when you do develop skills, and you're ready to start trading real money in the market, would you pay it back? This wonderful service that Traders Way makes available to you for free up front. I mean, it's right. I mean, it's an investment on their part into your future success. So when you're ready to capture that success of yours, would you please visit TradersWay.com, open up a trading account, invest real money, start trading real money? Because you want to, because you appreciate that they care about you and that they want you to succeed and that they admit up front that it's a symbiotic relationship. If you do well, they do well. In the business world, we call that a business partnership. Sure, they're a service provider, but it's a symbiotic relationship. I mean, think about that. Wanting that successful relationship up front makes a lot of sense. And not every broker, maybe no other broker thinks that way. I don't know. I think it's unique. So here I am. I am charged with the duty of helping you become a success as soon as possible. So do you want to, if you want that success, participate, interact with me, ask questions, get involved. But remember, you're in my office, and the people around you are our contemporaries. So please treat everyone with respect. Pretty simple stuff, right? Cool. So I hope you like being a trader. It's funny, I think about the markets like all the time. It just sort of occurred to me. I'm like, hey man, it's always on my mind. So yesterday, somehow we got into questions of, I guess you'd call it more macroeconomics, but it was due to the real estate. So I guess it's, what would you call that? It's not microeconomics. It's not like we're studying the margin, and it's not macro. But anyways, we're talking about business, we're actually economic cycles based on the real estate industry. Obviously, it's very sensitive to the economy. It's very sensitive to interest rates. They're all somehow intertwined in Newtonian physics style. So that's what we covered yesterday. I guess today we'll just talk about pivot points, right? So, for example, bears just hit their first target. Good job, bears. Whoop, whoop. And that's that. Good job, bears. Now there might be a little juice left. That's up to you to decide. That's the best target you can hope for this month. And you can see we already have it hyped up here. But this is the conservative target. This is the aggressive target. And if you get to the aggressive target, you have to get out and be done. Actually, Jan, there's a lot of things. So it was interesting, Jan, going back to that conversation. Hey, good morning, Daniel. Going back to that conversation, it was interesting because at that time, every Wednesdays, I did sort of a fireside chat where I would read, I would collect over the week newspaper articles, because back then I read newspapers, I read magazines and stuff, because my fundamentals were still developing. So I would read a lot. Like, I'd read a lot. I think I had 12 magazine subscriptions and 3 newspaper subscriptions. Let's see, I had the Wall Street Journal, Investor Business Daily, the Financial Times, and the Nikkei Weekly I had flown in from Japan. Those are just the 4 newspapers, and I think I had about 12 magazines. And I read and read, and I'd clip things out to discuss, and then we talk about it on Wednesdays, and most of the time I'd discuss how what was being reported wasn't actually accurate, or wasn't fully accurate, or their conclusions were not accurate. So what I'm trying to get to, Jan, is we talked about it for about a year that I was worried about a top, right? Then we discussed when the news was getting, like, every day it was basically wrong and I'm getting ready to get out. And then I'll never forget it. So anyway, so imagine for 6 months we talked about it like, I want to get out. I want to get out. Things are going to change. It's going to come crashing. Meanwhile, all the economic indicators were still quite good. Then one day, and I still remembered, I'm sitting in front of the TV, and it was reported that home sales came out, existing home sales. And I don't know if it was the first time in history, but most people that bought a home, an existing home, not a new home, most people in the United States, when that report came out, that bought a home already owned a home. Typically, people are buying their first home, right? This one, the typical person already owned at least one house already. And I'm like, that's it. When every idiot on the planet is doing one thing, it's when the last idiot makes his move that it's time to get out. So the next morning, I'm doing my webinar with FX boot campers. We talked about it, like I said, about a year, but day after day after day for 6 months. Like, people were really doomsday. Like, I felt like I was the doomsday guy. And I walked up and I'm like, that's it, I'm getting out. And so even though my wife and I had just had our second child, like, I mean nursing. We had a little toddler just starting to stand up on his feet. Very young children, right? So I had a 2-year-old and a 3-month-old or something, right? I announced that that's it, we're getting the hell out. And we sold everything. Sold all our assets. Real estate, stocks, everything. It was great. And since my wife was still nursing, like, she just got out of the hospital like a month or 2 earlier. It was pretty amazing. I flew to the other side of the United States. So I'm living in the San Francisco Bay Area, across the street from Oracle, if you know Oracle, on the peninsula. I flew to Atlanta because we had been there to visit, and we liked it and kind of stuff. But it seemed like moving to Africa. Like, when you're in California and you tell someone you're going to move to Georgia, it's like, yeah, we decided to move to Botswana. People are like, what the hell are you talking about, right? So anyways, flew to Atlanta on my own, rented a car, drove around, and I bought a house. Flew back, I'm like, honey, I bought a house. Cool, right on. Now, think of this now. Risk every penny you own on an idea, and then convince your wife, again, with a toddler and an infant child still nursing, tell her that you're going to move away from all her friends and family to the other side of the world. In this case, the other side of the United States. Good luck with that, man. And you better not be wrong. Do you understand what it takes to tell a woman who's nursing that she should leave all her friends and family support system and like, let's just pack up and go somewhere unknown. And by the way, her husband just bought a house. You haven't even seen it yet. So we packed everything up. I flew back to Atlanta, bought a bunch of furniture, had it delivered to the house. My wife never saw the furniture. By the way, my wife is not an idiot. She's a very, very smart, intelligent woman. So it's not like, oh, Wayne's just the boss man, controls everything. She trusts me. Huh. So talk about a trade, right? And I timed everything to interest rates. I timed everything to the Fed cycle so that when I got to Georgia and was negotiating interest rates and stuff like that, the interest rate cut that Bernanke did was the day before I closed on the house. So amazing, right? So do you understand like the risk on that trade? Every penny you own, right? And on top of that, like the amount of trust my wife gave me to go get it done, it's like the biggest trade anyone could possibly do. It might as well be $1 billion that you just put on a trade and started praying, right? Yeah. 3 months later, it was in the toilet. The whole market was in the toilet. Now I'm laughing. And then somebody asked the other day, is Forex recession proof? Well, yeah, because you're buying or selling, right? Like we can make money up, we can make money down. Things don't, like your taxation doesn't trade, liquidity doesn't change, or taxation doesn't change, liquidity doesn't change. Like for example, if someone doesn't lend you shares, you can't short sell something, right? To us, it's irrelevant if we're buying or selling, right? So then when the market was crashing, I was throwing parties for, 20,000 people, buying everyone alcohol. By the way, have you ever bought 20,000 people alcohol? I guess it wasn't 20,000. It was 2,000. So I guess if you've been to an Indian wedding, you know what I'm talking about. So, yeah, so what was the major indicator there? Well, the straw that broke the camel's back was the existing home sale data. Oh, I can't remember, Ed. Asabus says, are you currently reading any new books? No, I study, like, for example, I'm studying microeconomics right now, graduate level macroeconomics, right? And then I'm also doing statistics, and I love the statistics. I mean, they're both great, right? Economics and statistics, but what we're studying in statistics is really how these indicators that we use on technical analysis work. Like we're doing mean reversions, we're doing regressions, we're doing standard deviations and variance. So these classes are actually very helpful to me as a currency trader. But if you guys can hang on to your, 2 years, I'll be done on my graduate work. And, I can teach you guys, and then I'd like to add a whole bunch of other things to what's being, taught and trained if you want. If you guys are going to be up at the better level of, your successful trader now, what do you do? Have you ever asked yourself that? What are you going to do when you're actually successful and you're very, very consistently making money? Now, what are you going to do? And that's an even more interesting question to me, and I'd like to start working on that, but I'm in grad school, so when that's done, I'd really like to work with, let's say 25 to 50 of you guys, and we get past the boring stuff of how do I make money? At some point, that's supposed to be fairly easy, right? Right? Like we shouldn't actually be talking about like, how do I make money? How do I stay profitable? Those are important questions, but like, what do you do then? What do you do after? And that is so much more interesting because you will change as a person. And here's what's even more interesting. The people around you will change. What are you going to do then? And I got some really, really interesting ideas that I haven't been able to work on for many, many, many years that I'd like to do if you're willing to be successful by then. Play more golf. Well, actually, that would be fun, but I don't think I'll do it. Yeah, like Peter's a great example. Peter's now successful in many, many ways, not just profitable as a trader, but he's profitable, or he's professional. Now what though, right? And that gets, once you're licensed and registered, like Peter's gone through all those types of processes, then what do you do? And it gets really interesting, when you start raising money. So as a venture capitalist, and before that, working with venture capitalists, and raising money myself, your elevator pitches and your road shows and your slide decks and your due diligence packages and your pro forma cash flow statements and business plans and all this kind of stuff. And then with trading, you have to have your disclosure documents and all that kind of stuff, and ongoing compliance. How do you handle all of that? That's the business of being a successful trader, right? Yeah, and Peter's great. Now Peter wants $100 million. Good luck, Peter. Peter's doing a CFA, right? You should ask Peter. Peter right there. So anyways, very, very interesting stuff. Maybe we'll make Peter a guinea pig and help him raise $100 million or something like that. So anyways, yeah, I'd like to get all to that stuff down the road. So why don't you put that on your to-do list, like one more reason you should be successful, because we can do more interesting things in 5/8 crosses, right? So anyways, cool. Let's move on before we get too sidetracked. Back up here. This is all we've done, right? So that's the ultimate target right in here. And if you get down to this 1277, you should take profit as a bear. Those are the rules of engagement. You're like, but Wayne, but Wayne, but Wayne, if it no, there is no but Wayne. Right? You're supposed to be out here and moveon.com. Oh, Jen, you're a CFA? Right on. So Jen and Peter, right, they can calculate the convexity of bond yields. Well, why you would do a CFA versus is it necessary to be a Forex trader? Look, nothing is necessary to be a Forex trader except what I teach you, and you don't need to go to Harvard, you don't need a CFA, you don't need all this kind of stuff, right? Yeah, and there's cheaper ways of the portfolio man. I wouldn't call like level 3 CFA to be portfolio management, but like it's very, very complicated math, very, very complicated rules and all that kind of stuff. But here's the thing. Okay, here's the thing. When you're asking someone for a lot of money, whatever you think is a lot of money is a lot of money. Okay? They're going to look at you and say, how can I trust this person? And the more that you have in your background to show that you are mature enough to handle this money, the more they're going to feel comfortable. So like, what can you show someone that is sort of a filtering process between you and the average idiot? So for example, I have many years of experience. Great, right? I have a couple of degrees from Harvard. Well, I'm thinking 2 years ahead, right? But I have a couple of degrees from Harvard. Oh, studied what? 17th century puppeteering? No, right? Macroeconomics and financial management. Oh, shit, really? Yeah. Okay, great, right? If you add a CFA on top of that, they're like, oh, You know, it's just another thing. CFA is like an MBA for finance people. Okay? Well, right, it's past results is the only way you can trust a person through experience. And no, well, both are required. And by the way, what do you mean by past performance? First of all, you have to say immediately that it doesn't predict future results. In that case, that just washes away what you just said. But for how long? For 1 or 2 years? No, your past performance is almost irrelevant, because it doesn't tell you how you changed as the market changed, right? Plus, there's always going to be other people that are, think about it, like if you have a lot of money, you just get pitched 3, 4, 5 times a day by people that want your money. Everyone you meet wants your money. Everyone you meet, you're suddenly the most popular person in the world because you have a lot of money. Everybody loves you, okay? And everyone wants access to your money, so you're going to get pitched for all kinds of things, right? So anyways, you come up and you're like, I've been really successful for 2 years, but I've never done anything else. I don't, right? And then someone else comes up, like I come up to the same rich person. Hey, man, I have 20 years of experience. I'm famous in my industry, right? I have 2 degrees from Harvard, and I have a CFA. I don't have a CFA, and I have a CFA. People, it's just like slice and dice. The more you can add, and that, right? What if I was like a former vice president of Goldman Sachs managing the foreign exchange trading desk? Like, dude, your 2 years is just going to be nothing, right? So it's assumed you have, right? Like, people will get to it, but if you don't even have a track record, like, forget it. Nobody cares how much education you have, right? So, but it's the other way around. Once you have your track record, boy, the world gets very competitive. Right? Can Lego too. Here's the other thing. You're like, hey man, will you invest $1 million into my fund? And I'll say, okay, well, I'll consider it if you put in 200,000 of your own cash. And you're like, I don't have 200,000 in cash. Good. Bye. So that's what happens in venture capital. In venture capital, when you become a partner, right, not the investor side, right, not when you're a general partner, not a limited partner. So you become a partner within the firm itself, not the investment portfolio, but the firm itself, right? You are required to put in something like 2%. So if you're going to manage a $100 million fund, investing into, let's say, high-tech startups, you personally, as a general partner, have to have $2 million in cash in your own fund. That way, if you make a bunch of lousy investments and none of them hit, you're out $2 million. Okay? You see? So anyways, let's move on. Okay, euro dollar. Do you remember what this is? You remember talking about it on Friday? Okay. And then here's plan B, plan A or B, whatever. This would have happened first, so that's actually A and B. Okay. The only place a bull could have bought it, I guess, early on Sunday. And then here's plan B for bulls. You see how they never even got an entry? It wasn't bullish ever. Cool. Where are the bears going? Okay. Okay. If you're taking this as the entry, the Friday front run, by the way, look how I have it all marked for everybody. That's the Friday front run. That means M1 is the actual target, and that gets into the monthly buy. Now, notice this. If we hit this, today's Tuesday, so let's say we hit this today. That sets up the counter trend and is the monthly entry. It's just the beginning of the monthly swing. Oh, yeah, and the other thing I noticed, I want to make another comment. Jan said the CFA will not teach you how to trade Forex. To trade Forex in the United States, you have to have a Series 3, and that doesn't teach you anything. It's required by law, and it won't teach you a damn thing. In fact, none of it is Forex related at all, and yet, as a Forex trader, because you're regulated by the NFA, you have to pass the NFA tests, and it's all commodity futures. Is that terrible? That someone just stuffed Forex into some government department and you have to follow all the rules even though they have nothing to do with what you do? And I used to get so upset when I handed someone a disclosure document. I'd say about 80% of it had nothing to do with what I was doing or what I was going to do or what I was even capable of doing, because I didn't have a commodity futures account. I had a spot Forex account. And the disclosure document is supposed to help investors or potential investors understand the risks they're taking. That's the whole point of a disclosure document. But the disclosure document I was required to write was so unbelievably confusing that I don't believe it helped people understand the risk they were taking. I get so mad, like it was just maddening. Just maddening. So stupid. Anyways, Series 3 was one of the requirements, and none of it had to do anything with Forex. So they're like, well, why do I need to take that? If it doesn't help me and if it doesn't help the clients, why is it a requirement? It's just so silly. All right, boom. But good enough for government workers, I suppose. I wanted to make a connection here, too, with our target. Okay, see? Seems pretty reasonable, right? So if we hit this today, that's going to set up a counter trend. In that case, if a bull wants to get involved now, because that's what bears are thinking, a bull is going to want, let's give them a double bottom first, higher high, higher low, and they're going to want to take it all the way up. But do you understand the patience it took when we were up here? And I know we talked about this, so anyways. The patience it takes when you're up here and you're a bull, and you say to yourself, you know, you would have looked at this as plan A, and this is plan B. Yeah, economics helps with fundamentals. You know, all this stuff, like, will it make you a better trader? Yeah, possibly. First of all, getting any type of education just makes you more intelligent, or at least makes you more educated. Right, so it's not going to hurt you. But at some point, you know, the more you understand, suppose the why, like the first thing is how. You're learning now, like, how to make profitable trades, how to make a trade plan, right? But that's easy. The how is fairly easy. And then the why, coming up, you know, with your own seasonality and macros and all that kind of stuff. The more you understand about the why, then the better you're going to be explaining things like your strategy and the risks associated with your strategy with a potential client. You can sit down and start talking about economics, for example, and it'll help you, right? It's going to help you. It's not going to hurt you. So anyways, yeah, think of the patience. And by the way, thank you for subscribing. Okay. Think of the patience to let it come all the way back here for a potential entry. This is an M2, so the target's way the heck up here, off the charts to the right. Okay? Oh, you know what I should get going? Hang on. Let me get Trade the News going in the background. Cool. What was our hypotheses yesterday for the news? we had a hypothesis it was going to fall, huh? So it'd be very interesting to see what happens now if we get another down day. Pretty nice hypotheses to have in advance, right? Cool. Construction spending down. Anyways, cool, right? Take a look at the VIX. Yeah, you'll see by the time we hit summer, this will be like 8. Oil's heading smooth. 56 and up. Very cool. Yeah, so we'll see what happens the rest of the day. Somebody asked for the beast. All right. There's so much going on here that's so lovely. So the reason I have it here in a trend, in a channel, I should say, is so that you can visualize when it breaks the trend it's been making. Okay? So why do you do that? Well, you change your strategy from trending to now what? That's a lower low. So you drag this across, and there's your lower high. That's very, 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 very basic price action. Okay. And you have a monthly M2, M3, and a weekly M3. Are those buying pivots or selling pivots? Well, that's what that is, Paris. That's what this is. Okay. In fact, Paris, if you're going to use this as a guide, then you would use this as a guide. and then you try to make this parallel. Okay. Yeah. Well, let me ask you something. This week, or this week meaning last week, I don't want to be confusing. Last week and the week before and the week before that, we were thinking up. What was I talking about at the end of last week and yesterday? Was I still saying up, or was I saying down? You're good, Marina. Steven says down. Jan says down. Well, so if we've been up for 9 weeks, why would I say down? Yeah. Why would I say down? What? Why? Remember, the what is easy, or that what, yeah, the what or the how, I suppose, but the why is the more difficult.
You see, following the S&P downward revision to Mexico's outlook last week, we just get a comment from the Mexican president saying that the rating agencies are punishing the country for policies of the last almost 4 decades.
Cool, right? So it might be a coincidence, might be a lucky day, all that kind of stuff.
These rating agencies revised the Mexican outlook to negative following the election. Fitch did it back in October, and S&P did it last Friday.
So cool, right? Yeah. So you made money, right? Cool. You gonna put a tip in my tip jar? I prepared you 3, 4, 5 months in advance.
Reserve Bank of India going to hold 200 billion rupees in 7-day reverse repo auction on March 6th. Mexico President Lopez Obrador saying they intend to rescue the state oil firm along with the Electricity Commission, CFE.
Now check this out. You ready? Sell zone, target. And actually, if I take this out, if you've ever read my book or taken the swing trading course or whatever, this line here predicts this line here.
Trump tweeting now that they realize the only collusion in Russia was done by crooked Hillary Clinton and the Democrats. Neither Schiff and the other Democrats have gone stone cold crazy.
Stone cold crazy! I'm going to have to turn him off. All right, so let me get back to the webinar. So this will blow you away. Then we hit the same line here, which predicts this line here. That's 2 day trades in a row based on analysis I did 3, 4, 5 months ago. Jimbo says, I'm not sure if I understand what you mean. I didn't follow Jimbo's first thing. Sorry, Jimbo, I didn't see what you said earlier. Stone cold crazy. So, what do we talk about a lot? Starting your analysis on the 4-hour daily, dropping into, so like let's say a monthly plan, then you drop into a weekly plan, then you drop into a daily plan. Look at that, guys. This is pip to pip, tip to tip. Day trading. No comments? No comments, huh? All right. Stone cold crazy. WTYOY. Still sideways. So remember, I have this trapped. Do nothing down here. Do nothing, right? Sell or buy down here, sell up there. If we were trying to force this into a trend, this was the buy zone for the week. This is the buy zone for the month. And so was this a buy? Very mediocrity, but yeah. Tony says, very good, can't comment. Right. Oh, are you, but Jimbo, are you talking weeklies or monthlies? The drop in the first week in January definitely messed up the monthly pivots. I completely concur. I also concur that I don't really like trading pound yen with all the Brexit stuff, but nonetheless, lots of people love trading it. So you still hit my phone up. Yeah. Yeah, no, that was a pound yen. So this is the disappointing one, mostly. Because remember, I prefer CAD up, I prefer oil up, all that kind of stuff. This is getting punished. But right off the pivots, right off the monthly swings. I suppose this is indicative of a sideways moving market, which, you know, you can see we've marked up multiple times as a sideways moving market. Trending is so much better. Trending so much better. So it's just out there now. The question is, you know, when do we trade it as a break? And I'm still not ready to trade it as a break. You know, you'd think after a big move like this I would be, but I ain't. Now, here's the interesting thing. This is the monthly entry. Okay, that's an M2, so it's an M4. So here's the top of the market, and then here's the top of the week. So if you're a counter trender, guys, you're going to look for it here. And the confluence is the weekly and monthly. Right. By the way, while we're at it, again, I want to thank you guys for being here every day. I know it's only an hour and a half a day. It's more than an hour. So, you know, it's about an hour and a half a day that we hang together. But I enjoy it. So I just wanted to say that. Thank you for the respect and loyalty you show me every day. Thank you for being in my life. Okay. Raymond, actually, when I wrote about that had to do with dailies and, you know, that kind of stuff, following the, but I don't use it as much before or now as I did before. So, no, you don't have to thank me, Tony, but I feel like I have to thank you, or not that I have to. I guess I'm trying to be respectful of you as you are respectful to me. So just want to make sure you know. That's all. Cool. Hey, thanks, Guy. Guy, I would have gotten up anyways, but but sure. So cool. And I also like, there's quite a few of you guys that have gone on from these webinars who are also FX boot campers, or you've gone through performance training, you've done some of the other entrepreneurial stuff I've been doing. And so I've gotten to know you guys, some of you guys quite well. And that's really cool. Thank you, Mickey. Oh, thank you, Jen. That's a very nice thing to say. I think it's a blessing in Chinese, isn't it? May your life be interesting. So that's cool. Right on. Good group hug, everybody. Is this going to wake up, you think? Sure taking its sweet time. This is an M3, so if we can get through here, which I wouldn't bet on, but if you get through there, the target's M1. What if you were now a bull on this? Remember, I'm never a bull on the Mexican peso. It's not that I don't like the Mexican peso or something, but I only trade the remittance play. But if you were a bull, this is going to be irresistible. This area and in particular this area. And it could do one of these things. That's the other way to trade the breakout of a channel. It's the second way. Thanks, J-Dub. Yeah, Ed, well, the problem, so Ed says Trump always wants weaker USD and low oil prices, right? And why is that a difficult thing to deliver? Well, when something is oil, so like oil is oil, right? Like that cigar is a cigar, no matter what happens to the price. Right? So a barrel of oil is a barrel of oil is a barrel of oil. It's the same barrel of oil if it's $100 or $200, right? A barrel of oil is a barrel of oil. Now, what happens if the currency in which you are purchasing oil falls in regards to purchasing power? So like purchasing power parity has to do with how much a currency in terms of oil, right? If you priced your dollar in terms of oil, but in this case, if the value of if the purchasing power of your currency, whether it's a dollar, a US dollar, Canadian dollar, Zimbabwe dollar, if the value, if the purchasing power of that currency falls in relative terms to your currency, what happens to the price of oil? It seems that oil's more expensive. It seems like oil has gone up in price, but it's not true. Oil hasn't changed. It's just a barrel probably sitting on a dock somewhere, right? You just have to pay more of your currency for it. It's not like the oil got better. It's not like it's aging in oak barrels. You're like, damn, you think this WTI is good now? Come back in 8 or 9 years. Woo-wee! This is going to be some good oil, right? No, that's the load of nonsense you hear about wine or whiskey, right? Great. Cool. But the oil ain't going to get better. So the oil is constant. So if oil goes up in value, and let's say, supply and demand obviously hasn't changed, then it's just that you are paying more because you're, right? So what Ed is saying is, if Trump gets what he wants and has a weak dollar, which I agree, that's what I want for America too, is a weak dollar. Great. Okay? But that means you will have to pay more dollars for the same old barrel of oil. Okay? So it's hard to get both. But what you can do, so that's based on currency, okay? So then Trump can do this. When oil is low, when the dollar is low, right? So the economy is doing good, not just our economy, the global economy. And Americans are so rich that they would never buy an American product because it's too expensive. They'd rather buy it from a poor person who's willing to work for super cheap, because if they don't, they will starve and their children will starve. So what's wrong with capitalism, right? If I decide to send my money to that country where if they don't earn money, they're going to starve. I see that as a good thing if I can go and say, well, then, here, take my money and work for me. Oh, but it's unfair. What do you mean it's unfair? They're going to starve if I don't give them money, for crying out loud. So anyways, the whole world is better off if I share money with countries that have workers that will work for cheaper than my local workers, right? You know what it's like to hire an American? I was talking, I put on a super fancy roof on my house last summer, and I was talking to the guy that runs a roofing company, like it's his company, and I'm talking about him hiring employees and stuff. And he's like, it's hard to hire people. He's like, every single white guy that shows up to work in his roofing company has a drug or alcohol problem. 100% of the time. Right? This is his words, by the way. Then he says, if you hire the black guys, they don't show up all the time. All of a sudden, they don't show up for work for 1 or 2 days, and then they do show up, or they're late. And he's like, so then he hires Mexicans. Boom. Awesome workers. They will work like dirty dogs up on the roof. And these are his words, right? And it could be 10 o'clock at night. It's super dark. They're up there with flashlights working. Take that on a global, like where you put the money where you can get the best return, and then if you can't get Mexicans, then suddenly you go to the next worker, and then you hire all of them, and then once you get, and then you go to the third one, right? Global macroeconomics. So if American workers are, let's say, too rich, so let's just say America is the drunk, pot-smoking white dude. Well, and that wants $30 or $40 an hour to do nothing. Well, then I'm gonna hire somebody else, right? So in this case, I hire someone else in the world because America is a big, expensive, drug-addicted, lazy person. The money gets spread around. Yeah, well, well, Jimbo's, the why, and what do you do now, right? Yeah, that's right, Peter? It's true. You definitely want the Mexican guys. It's no doubt. And it's really funny when you actually start hiring a lot of workers. You're like, where's your Mexicans? When are your Mexicans showing up? Because I want the real workers. Oh, I guess I'm digressing a little too much. Anyways, okay. So what I'm saying is, let's go back to the other thing to do. I got sidetracked on macro ideas and global trade and stuff. But let's go back to, you get the dollar week, so you're spending money around the world, and that's a good thing. And now countries that are poor are receiving money, so now they're less poor than they used to be. Capitalism is a good thing, okay? That weakens the US dollar. So now it seems like the price of oil is going up. So now Trump could also do things that will entice higher production of oil out of the United States, for example. He can't do it in other countries, but he can get American companies to produce more oil. Now supply goes up, and then the price of oil goes down, even in terms of weak dollar. So what you need is positive global macroeconomics that gets Americans sending their money around the world, whether it's spending or investing. So like, why not go to London right now and buy a flat? Right? I can pick up my money, go to London, buy a flat, because I can get a deal in London now because of Brexit. Sweet. You see what I mean? Now my money goes there, demand for the British pound goes up, and the supply of US dollars goes up. So the pound goes up in value, the dollar goes down in value. And that's a good thing, because I'm taking my money and I'm placing it in a country that is now probably poor, the United Kingdom. Good job. Good job, Britain. Okay, and then Trump can increase supply. Like, for example, he's president of the United States. He can just take out of the Strategic Petroleum Reserve, the SPR, which is a part of the EIA, or is it the IEA? International, I guess it's the IEA, SPR, and he can put that on the market and drop oil prices, which is good for the American economy, good for what he wants, and it screws Saudi Arabia, so everybody's happy, right? Because I'm Saudi Arabia. So yeah, it can be done. Oh, Christina, great. Christina says, forgot to put a stop, is now losing money, falling against every pair. Great. Lost 600 pounds, okay, or euros, sorry. All right, so when are you going to get out? Right? When are you going to get out? What's your plan? I'm not going to make a decision for you. I'm not your mama or your papa. Okay. So anyways, I want to get back to technicals and stuff, right? Cool. So let's get out of this, because it's all kind of sideways. It's all kind of sideways. We kind of moved here. Gold has hit its target, all that kind of stuff, which is interesting because you see a lot of these things want to flip, don't they? I'm already here. Let's do that one. But the thing is, guys, you have to learn how to be okay being wrong. You need to, because being wrong or taking a loss is a good thing. Being wrong and taking a loss is a good thing, not a bad thing. Taking a big fat loss because you're too embarrassed to admit that you're wrong is not a good thing. You see what I mean? There's a U2, Bono has a line in a song that I really like, and I was trying to think, I heard it quoted from a book. So he ripped it off from a book, or borrowed it from a book, and I couldn't think of the book, but I mean, it might be I don't think it was the Quran, Bhagavad Gita maybe, or I don't know. Anyways, are you strong enough to be kind? It's like, are you strong enough as a person to be wrong? Like, think about, and especially if you're going through a losing period right now, you need to really ask yourself these big philosophical questions. Are you so weak as a trader that you can't admit your trade plan has failed? Like, what kind of trader is that? Is that a characteristic of a successful trader? And if your answer is not, then you need to start creating a plan. Because obviously you're not thinking intellectually. You're doing something emotionally, like you're embarrassed about being wrong. Now, the fact that you admitted it in front of us means you're developing the strength, right? To be a strong trader that's okay with being wrong. So now I would look at it and apply technical analysis. Where's the next bounce? So for example, let me draw on my chart here. I'll do it with white. Okay, this is a trend, right? And you're long. So ask yourself, based on your analysis, when's the next upward move? And then use price action to figure out where it's going to get challenged, and see if you can intellectually now identify how you can mitigate your losses. I'll give you an example from my own life, and this was many years ago now. I did a Friday front run, and I remember it very well because I thought I was going to make a lot of money. Some news came out over the weekend, and I can't remember what the news was, but it was like I can't even see an example here. It was kind of like I bought. I don't know. That's not a good example either. Anyway, so I bought on Friday on a front run, and then news came out, and it was news that I thought was really going to help my trade, and I was so excited, and I was dreaming of all the money I was going to make because I put a pretty reasonable size amount trade on, and I remember waiting all weekend, like, oh my God, how much am I going to make? 200 pips, 300 pips. And I was practically out there spending the profits. Right? And then, so I'm at my charts. And I remember sitting there, it's 459. I'm thinking, what if I'm up 400 pips profit? You know, I would have so much money, right? I remember I was so excited. And I opened up, and the market opened minus 300, not plus 300, minus 300. Well, my stop was 50 pips away, which means my stop was never hit. For your stop loss to not take you out, so let's say I went long here and I put a stop here, and this was a total of 50 pips. Okay? And let's say on Friday at the close, price was here. It opened down here. So what happened was I went from here to here, but it was a gap. It never touched my stop. It just went from here to here. So I'm like minus 250 in the hole on a big trade. And I thought it was going to be plus 250. So I had an emotional response. You understand the emotional response of being in a situation like that? I was certain I was going to be up 250 pips, but I was down 250 pips. Holy shit. So I was losing a lot of money. But I understand how to trade a gap. So going back to this example, that's where I was. This is where I am. And I used that, and I used technical analysis, and I ended up taking the loss about here. All right, so I ended up losing, actually, it would have been more like this. But anyways, so instead of losing 250, I lost like 100, let's say. which is okay. I can come back from 100. So 2 or 3 days later, I had made it back. Enough said. But I didn't freak out. Okay? I didn't freak out. I stayed with the technical analysis. Now, I admit I was chewing my fingernails and I'm sweating bullets and I'm leaning into my chart and I might have even prayed. But I knew how to trade technically. I knew how to trade the situation I was in. And I didn't panic. And I used that not to work my way out of a loss. That wasn't it. I stayed intellectual. And I knew there was a very high chance, like the pattern in this situation, was to work its way, fill the gap, which is because nature abhors a vacuum. And I let it float back to where I thought the gap would have filled. And I took the negative 100, which is a heck of a lot better than a negative 250. Now, if it had done this and went even further down to like negative 300, that's where I'm like, okay. But that's not because of the negative 300. It was just that the gap fill would have failed and I would have just moved on. The technical analysis failed. The plan would have failed, okay? So don't hang on to a losing trade because you hope it's coming back, okay? Do your technical analysis. Ask yourself what is likely to happen. If you're long and losing money, where's the next level of support? Or are we on? So like if the next level of support is minus 50 from where you are now, then forget it. But if you're on support now, use technical analysis to hang on for the next rally up. Realize it's not trending up, so it's not going to make a higher high. Don't pray for break even. So many people pray for break even. That's so stupid. Why would you get out of break even? Oh, I didn't want to lose. Well, once again, you're not focused on winning. You're focused on losing. So anyways, use your proper technical analysis to identify levels of support and resistance and do your job. Okay? Does that make sense? So, by the way, Cristiano, you don't know how to trade, clearly, right? You clearly don't know how to trade. So you should probably stop trading real money. You should probably pay money for education. So I'm going to move on. There's nothing worse about talking about trading with someone that doesn't know how to trade. You need to learn how to trade so we can have the same common language. Right? You don't know how to trade, so you gotta get serious now. So anybody can lose money. Trading room, Nick. Nick, you got your own trading room? Teach me. No. I'm here every day if you need help, but you should just join FX Bootcamp as soon as possible. All right. Yeah, so let's do Aussie this time. It's just a name. the trading room, Nick. All right. Welcome, Nick. All right. That looks like it might be support. This looks like it might be resistance. Let's try to figure out why. Okay, cool. This is a weekly M3 This is a monthly M3. Is that a place where people buy, or is that a place where people sell? Holy smokes, Jimbo. Yeah, you got it. Jimbo says stick with the strategy, take small losses, hit big winners. You got it. Jimbo's got it. No, well, Iron Man says price action, yeah. Candlestick patterns, yep. Tell you everything you need to know. Wrong. Price action, I agree with. Candlestick patterns, certainly. You forgot pivot points. If you don't have that other leading indicator, I feel confident going head to head and winning. So, but I do agree with you, price action and candlesticks and stuff. Like if you don't know what a double top is, you ain't going to be successful. If you don't know how to trade a trend or spot reversals or even anticipate where, I mean, like if you can't do price action, it's like you can't even see a candlestick pattern, right? Because now you don't even know where support and resistance is, right? So I agree with you on those two things. But I would never trade without pivot points. I just wouldn't. Okay. So anyways, yes, this is a sell zone. Absolutely. So you have to put that into perspective. Okay. What about down here? Well, it's a buy zone, but so let's put up here, sell. And this is a buy. However, only on a weekly. Okay, the monthly buy zone's way down here. So based on that, what would you expect? Do you think more bulls at the bottom here or more bears at the top here? Iron Man, well, what I'm saying is you would never, if you don't understand price action, Iron Man, like you said, so I'm agreeing with you, so just hear me out. If you don't understand price action, you would not be able to identify support and resistance. Because you right, they're the same thing. Price action, or sorry, pivot points. Okay, so price action, support and resistance. Okay, let's do this. Let me write it down in case people are taking notes. Price action is equal to support and resistance of price. And that is a leading indicator. Because it's a leading indicator because you can see where resistance, in this case, in the future is going to be. It's right. It helps you to know that in the future, if you're up here and see weakness, you should sell. Okay. So a leading indicator is price action, and the type of leading indicator is it's the support and resistance of price. Now, pivot point, let's go. It's also a leading indicator. Okay. pivot points. However, it's support and resistance of market. So you can almost consider it like a sentiment. Hey man, just do my thing. Right? It's the support and resistance of the market. And the interesting thing about pivot points is it looks at whatever period you're measuring. A daily, right? So what happened yesterday, or what happened last week, or what happened last month, so on and so forth. And it does mathematical calculations. One of the things it does is it looks at the high and low, so it looks at the range. How much is the market moving? Right? Is it moving a little bit? Well, if yesterday was slightly cloudy, today is going to be slightly cloudy. If yesterday was mostly cloudy, then today might be mostly cloudy. If yesterday was rainy, today might be rainy. If yesterday was really, really, really sunny and hot and dry, then tomorrow or today might be really, right? Things do change, but it's just looking at the most recent period and saying, well, based on what happened last period, there's a pretty good chance something similar will happen. And if something dissimilar happens, meaning something quite different happens today, then we will also be able to measure that because we'll say, holy smokes, yesterday it was beautiful and sunny and today there's a tornado. I noticed the difference. I'm going to change my strategy. I think I'll go inside today, maybe even in the storm shelter, right? So even knowing when, it's okay. But anyways, that's just the range. We don't really care about the range. And if I did high and low, high plus low divided by 2, I'd get the average. Well, we're not interested in the middle. I said pivots are like a sentiment indicator. So the way I do that is you weight the average. So again, if I did high plus low divided by 2, I get the middle, the mean. It's not, well, right now it's the mean, right? But it's also the median, okay? But what I want is I want something different. I want to understand a change in sentiment. So I'm going to weight the average, and I'm going to say high, low, but where did the market close yesterday? Where did the market close on Friday? Where did the market close at the end of the month? And by doing this, high and low and close, because, right, a high plus low plus close at the end gives you a sentiment in the sense that, let's say the market moved 100 pips. That doesn't tell me much, and 50 is just arbitrary. That's halfway through. But what if it moved 100 pips and closed very bullish relative to where it started? What if the market moved 100 pips but closed bearish relative to where it started? Very important information. So we go high plus low plus close divided by 3. Gives you the weighted average, okay? The weighted average of the last period you were trading. So if the market yesterday moved 100 pips and ended the day bearish, today might be bearish too. These charts are not insane, Iron Man. You crazy, Iron Man. You're saying the pivot points. Okay, let's do this. I want to see if I can make Iron Man happy. Okay, Iron Man? Is that too much for you, Iron Man? I don't have a moving average. I don't have an oscillator. I'll get rid of the candlesticks if you want. Are you okay with that now? I know I've added pivot points. Are we good? All it's doing is telling me there's a bearish entry, there's a bearish entry, and there's the target on the short term. All right. So Iron Man says naked chart is and anything else is too much. Yeah. No, but I want to make out a point like you're set in stone, which is fine. I've gone out of my way to agree with 99% of what you're saying. But if that's too much, then you're set in your way. I can trade probably almost any chart. I'm just telling you the chart, the information that's important to me using one additional measure. I only have one indicator here, pivot points. Now, of course, I have weekly and monthly, but that's a choice. And I could drop this into daily. But look, if one indicator is too much, then you're so committed to no indicators that that's your thing. Fine. But I can trade this chart, and it's got lots. Doesn't matter. I can make money on that. So, anyways. Cool. Yeah. Cool. Right on. All right. So, yeah. Anyways, let's go into Euro. Well, I think it's interesting to have the conversation from time to time of what works for some people, what doesn't work for some people, and all that kind of stuff. It's helpful for people to learn, right? I'm just saying, yeah, you're right. We don't need a bunch of RSIs and MACDs and 97 different moving averages. And, we don't need indicator on top of indicator on indicator. All you need to be able to do is identify support and resistance, which is basically a target and an entry. I use two ways of measuring support and resistance, price action and pivot points. Everything else is helpful, but not necessary. Cool. So this chart is tricky. Okay, this chart's tricky. This is a weekly sell. The problem with this one is this is the monthly sell and it's way down here. So what do you do in a situation where it stretches out? Now, bear in mind, 3 months ago, and then 2 months ago, and then 1 month ago, and then Friday, we talked about yen pairs coming down. So it's quite an amazement that even though Friday it broke out, it still came down despite all that. So we'll see. The follow-up here is the retracement back to the weekly central. I need to change the color of my arrow here. Okay. Okay, so this is the next move. If you're a bear, you got permission to do that. You have the weekly and you have the monthly. The monthly is a little unfortunate because it is the monthly M3, which we do want to sell on, but we didn't want that spike. But anyways, let's just call it 1 day out of zone. And then this retracement back here is a little dangerous because bulls are going to want to buy it somewhere in here. Why do we know that? That used to be resistance, so now it's support. And this whole area is a buy zone. But it's weak because the monthly, again, is down here. So on the longer run, bulls, you're going to find more bulls down here than here. Okay, this is more longer run bigger charts than the 30-minute. Let's call it a daily chart. That's a buy zone down there. So there's a little bit of buying here. There's much more buying down here. So how do we put this together? Well, I think we'll probably get challenged in here and then break down and then pop back up. Okay. Now, the interesting thing is, where will April 1st be? Because if you remember, a big part of what we talked about was this coming down toward this area and then recovering by April 1st. So we could, if we're going to stay up in this zone, if there's enough bulls, we could just sort of come down here slowly. So let's say we don't do much more this week, and then there's another sort of downward move next week, and then we just sort of flop around like fish out of water and then head up the third week. Well, if that's true, then we would know the repatriation would have finished before April 1st. Like, for example, if you're the chief financial officer for Toyota, are you going to wait to the last day of March to bring money home to do your taxes? Of course not, right? So there's going to be a flow over the course of the next 3 or 4 weeks, but at some point, the money that's supposed to come home is going to come home. So it doesn't have to fall to the first. It could fall for a week or 2 or 3 and then recover, and we go back along the way, right? All right, so Iron Man is a spammer. Iron Man's trying to get you to go to his webinar so he can... What a poacher. Jen says, I started check weekly yen charts to test the March hypothesis. Well, you could have also gone back in time and looked at what happened in other Marches. That would have been a free and cheap way of doing it. Thank you, Nintendo. Yeah, poaching. Poaching. Amazing. All right. Thank you, Infinite Solutions. That's cool. All right. Where should we go from here? Well, it's been an hour and a half. I got to check my time. What time is it over there? Oh, my gosh! You didn't tell me you're so late. You guys, incorrigible. Let me speak for all that time. Cool. Going for a swim, huh? So I guess, you guys want to meet up tomorrow? Cool, right on, guys. Yeah, yeah, it'd be nice if you did the little like thing. Right on, Tate. Thanks for buying the book. I feel like I need to write another one because it's been 12 years or something. Also, guys, ask, like, if I didn't cover your currency pair, would you please request it on the comments below this video? So as soon as I stop streaming, you should be able to refresh your page or go to the video and leave a comment. Just let me know what currency pairs, if I haven't been covering your currency pair. I'll read it today, like later today. I'll read the comments and I'll put it on my radar of things to cover a little bit more. Philip says, what's my system? What do you mean, what's my system? Like, oh. Well, I share it every single day, Philip, so why don't you subscribe? I've been teaching my system every day for 15 years or something. Yeah. Also, feel free to take any of the training courses I put together also to answer that question at fxbootcamp.com. Yeah, why update the world's worst book? Well, it can always maintain the championship, huh? Yeah. No, Philip, just subscribe. And tomorrow at 7:30 in the morning, New York time, I'm going to do another webinar. And then Thursday at 7:30 New York time, I'll do another webinar. And then Friday, I got Trade Non-Farm Payrolls live at FX Street. So you can check me out there. And then next week, and then every single day I'll be here. So just join the team, Philip. I'll teach you everything I know. Some people just do these webinars. Some people have bought my book, but it's 12 years old or something. But it's I put the resource together to answer that question you just asked. And there's like 30 or 40 hours of videos at fxbootcamp.com. Again, answer the question, what is the trading system? Technically and fundamentally, all the information's there. Yeah, my webinar on Friday is 3 hours long. Why don't you come to that? Cool. All right, guys. Well, once again, and I mean it, thank you for being on my team. Click the Forex.Today logo to become a subscriber, and feel free to watch anything else I've done on YouTube. There's 4,000 videos. Visit tradersway.com and open up a demo account today. Also, in the video description below, there is a link to download all my MT4 chart templates for free. Peace on earth. May the pips be with you. May our profits be above average. See you tomorrow.